Well, this may be a very useful thing, not commonly found on YouTube, but it's not going to apply to a lot of people. But I noticed a lot of people on my channel might be looking for some ideas on what could possibly be making some money, and maybe they're trading in and out of accounts on a brokerage account, right? Different shares are selling and buying and all that type of stuff. Well, I want to go over a fairly recent rule. It hasn't happened. I don't know if it's been around a couple of years. It's called the wash sale disallowed. Wash sale disallowed. And when this applies. Now, this is going to be real simple, so I just want to point it out because I think it's important. Say, for instance, you bought 63 shares of something, XYZ company, $53 a share, right? And your basis is $3,339, right? That's when you bought it. Don't matter when you bought it. It could have been a while ago or whatever. Say you sell it on June 15th, 2012. You sell all 63, just to keep it simple, all 63 shares. But you sold it at $51 a share, so you got $32.13. So basically, you sold it for $2 less a share. So you sold 63 shares, $2 less a share. That should be a recognized loss of $126, the difference between the revenue and the basis. Not in all situations. If within 30 days after you sold these shares, you repurchased shares of the same company, same stock ticker and everything. Now, you might be thinking about this when you're dealing with silver or gold or whatever, and you're seeing the prices going down, and you sell it and you want to repurchase it because you want even lower, right? You notice the trend is down. You might, to avoid this, you're going to have to wait 30 days. You're going to have to wait after 30 days. But what you could do is you could buy a different ticker. In other words, if you're doing commodities, silver, gold, or whatever, there's more than one ticker out there you could buy anyway to invest in the underlying commodity without leverage or whatever you want to do. There's more than one ticker you could buy in the same thing. But say, for instance, this is just XYZ company. You sold 63 shares, right? You buy back 50 shares a couple weeks later. Now, if you bought back 50 shares like in more than 30 days later, say on July 20th, 2012, this would not apply. But since it's within 30 days, what happens is 50 shares of the loss, in other words, you lost $2 a share, that's $100, that's wash sale disallowed. You're not allowed to take this as part of your recognized loss on your tax return until the following year. And the way you would do that is in this year, you would have a recognized loss of $26 only on 13 shares because you bought 63 shares and you repurchased 50. So 50 of those shares, since you repurchased them within 30 days, they got wash sale disallowed. I don't like this garbage either, but this is the way it is. So I think I want to point this out to some people. I think there's a few people out there jumping in and out, and you got to know about this. So when you do this, though, you have the recognized loss in, say, this year of $26. Just keep a nice, simple example, right? Wash sale disallowed is $100. What happens with this $100 is you actually don't lose it completely. What happens is it becomes part of the basis on the 50 shares that you bought. So your new basis is, instead of $26.50, it's $27.50. So if you sold this for $3,000, you would recognize a gain of $250, less the adjusted basis of $27.50, not $350, which would be, the original basis you bought it for. You could add on this wash sale disallowed you couldn't take in 2012. If you sold this stuff in 2013, you could add this as part of your basis, and basically you don't lose nothing. But you got to keep track of it. You got to keep track of it. I don't like these rules because this stuff creates a bunch of stupid busy work, to tell you the truth, and it really does nothing. It kind of aggravates me, but I think it aggravates a lot of people. But I just figured I'd put this out here as kind of a service announcement for some people. Probably view my account or whatever the hell it is on YouTube. They might be jumping in and out of things, and you got to watch for this wash sale disallowed. So if you sell something, now it doesn't matter if you're selling it at a gain. I mean, if this went from $53 a share to $55 a share, and you got $2, profit per share, you're not going to, you're going to have a gain. It's if you buy it back, it doesn't matter. It's only when you have a loss, and then when you buy back the same exact stock ticker within 30 days, you're not going to be able to recognize the loss on whatever on the number of shares that you sold that you rebought back. So if you bought back 50 shares and you sold 63 at a loss within 30 days before you bought them back, you would only be able to take the loss on 13 shares, and then the rest of them, the 50 shares, you would have to wait till the next year or whenever it is you sold to take, to basically comes out in a wash then, because then the wash sale disallowed is added to the basis. So that's that much less revenue or that much greater loss you can recognize. It does come out, but you got to keep track of it. Its problem is, in this situation, you can't take it in the current year that it occurred. Now, I hope I'm clear as mud on this, but I'm trying to keep a real simple example out here. I'm not sure if everybody would love hearing this stuff, but it's just one of them rules. It's not been around that long, and that's just the game. So I should put it out here because I think some people are jumping in and out, buying and selling and all this other shit, and you got to watch for this thing. Now, the way around it, if you're dealing with commodities, you can repurchase another ticker, because it's not like, it's silver. There's several tickers out there you could buy that you could invest in silver. It's not just PSOV and SOV. There's other things. So as long as you buy something else that's not the same, you could do that. But, a lot of cases you might not want to do that anyway, so you might be stuck with this rule. But like I said, it's like you can take the loss at one point in time. It's just going to have to be whenever you finally sell those replaced shares. Then you can take that wash sale disallowed, add it to the basis, and it would either you could deduct it right there. So I don't know. I hope I'm making it as clear as mud, but that's about as clear as I can explain it. It's just one of those things to watch for.